Welcome to another episode of the Mill Social Talk podcast. Yeah, as we know, we've been kind of going through it with Devon series. Gabby's hasn't gone anywhere because she's my anchor. Gabby's the anchor of this program right now. So we're going to keep on rolling, and we're going to shift a little bit to what's going on in the market. Me and Gabby will just have a conversation. By the way, I always say if you want to know something, please email us. Go to the Mill Social Talk podcast or go to millsreal.com. Millsreal.com. Send us an email. And we will then respond. If you want to know about something here, that you hear and that you're not sure about, we'll talk about it. So again, Gabby, y'all know Gabby. She's been on the program before many times. So we will be talking about what's going on in the market, right?
Oh man. So
I want Gabby to kind of give me her experiences. She's a loan officer at Devon Bank, and she's done many. She's done many of my own loans. And she's done loans for a bunch of my clients. So I want to let you guys know she has been my partner. I value that relationship. And so I want you guys to know exactly what's going on, not only with Devon Bank, but whatever program they have, but the market is general. As right now, it's kind of crazy with what's going on with rates and what people think and what they don't think and the perception of the market. So I want to kind of go through that and just kind of have a casual conversation about what's happening. So first I'm going to ask Gabby, what has she noticed? What's been going on? What's been going on with you?
Yeah. I don't even know where to start. There's so much to cover. Okay. Let's start with the market. Let's start with me. I've been okay. Thank you.
That's what I'm saying.
Been missing you guys, so thank you for having me again here. In the market, talk to me about, you said, what's going on. Well, we all know that interest rates, were really high. They're still high, but have we seen any changes? Yes. Have we seen a little bit of drops? Yes, but very little. So something that it's not going to make a huge impact right now. So not more than, people think, okay, are they stabilizing? Yes. Are they dropping? Very little. Is it making a big difference? Not necessarily. We're talking about 1/8 of a point or 1/4 of a point. So nothing that is going to make a difference in your payment, a huge difference. So it's going to make a difference depending on your purchase price, of course, and your loan amount between 20, I'm going to say 60, at the most, depending, again, especially because we like to we talked about, first-time home buyers. Normally we want to start with a lower purchase price, right? So in this case, the interest rate is going to make not much of a big difference right now. And, we do have a lot of people that are pre-approved, pre-qualified, and unfortunately, we all know that, and you can, attest to that there's not enough houses, right? There's not enough supply out there.
That's
so
true.
We have so many buyers, but not enough people selling, right? And I think that in part of it could be that, somebody that it's looking to sell, right? They don't want to let go of that 3.5% to then purchase. Maybe they're looking to downsize, right? Yeah. And they're looking to buy a condo, but either they will have to pay it off or be stuck with an interest rate that is double what they have right now. So I've seen that some of the sellers kind of like are holding off on their sales, and then just in general, I think that just the supply is just not there.
Well, let me tell you something. Interest rate now this will predate exactly how long I've been in the market, because my first home, right? I bought at 10.5%, and I thought it was a great rate, right? Mm-hmm. That's in the 90s. I bought at 10.5. So I bought my first home at 10.5 or 11%. That was fabulous to me. It was like, whoa, I got 10.5. I'm fabulous. So I don't want people to think. Now, let me say, over the past 20 years, we're used to lower rates.
Right.
Hello, we're used to lower rate. Mm-hmm. Prior to me getting into the market, rate was when I finally got in, it was 13 to 14%. That's where our rate was.
Yeah.
Before I got in, it was 19%.
Right. Yeah.
Right.
Yeah, I remember.
So
I mean, not that I was around, but I did see my parents' mortgage statements in the 80s. They were about
19%.
19%. Yeah.
So all I'm saying is 6% is a great rate.
Yeah. Mm-hmm.
I'm just saying we're used to 2 and 3, and you know what I'm saying, but 6 is still good. So now, saying that, you can still get into the market. Now, yes, inventory, I'm going to address it. Inventory is very low. So if you're thinking of selling, now's a great time to sell. Literally, now we are still getting multiple offers on property.
Yeah.
Right?
Yeah.
Literally, and that just happened to me yesterday. Multiple offers. A lot of people are looking for property, but not enough inventory. So if you're trying to sell, wow, hello.
Yeah.
It's a great time. It is a wonderful time. Now, it all depends on what you're doing.
Right.
If you, especially if it's paid off, let me say, rate's going to come down.
Right.
It's not going to go up in about a year or so. But if you see that house that you like, sell it.
Right.
Or you say, buy it and sell yours, or whichever you want.
Yeah.
You rates will come down. So just know that. Don't get scared. What goes up will come down, right? But how's the mortgage industry? I mean, you feel like you're getting you're not getting a lot of application. You're fighting for applications.
So actually, you know what? I'm still pretty busy with pre-qualifications. The problem is that, just unfortunate that, there's not, the inventory is just not there. But something that I want to mention also is, you're not going to be, I mean, there's a lot more chances of you getting, buying a property when you have the pre-qualification, when you have the pre-approval. Because if you don't have it, and you see the house that you really wanted, and you know that you can afford it, and the taxes are perfect for you, and the payment is going to be perfect for you, and you're like, I need to submit an offer. Well, guess what? You needed to apply a month ago to get that letter to submit an offer. So your chances of getting that house is even less, right? So you got to make sure that you still do that, right? Do you still get your pre-qualification, so then when that property comes available, you're ready to go. And something that I do, a lot of people say, oh, you know what, those interest rates are high, or you know what, I don't want to pay that much money. But if you think about it, let's say that your current rent is $1,000. Let's just a round up number, right? And at the end of the year, I have customers who have been, oh, I don't know, I'm still thinking about it. It's been a year. And they already paid $12,000 in rent. And
or
it
more.
went, right, exactly. And it went nowhere, right? Now, if you purchased that house a year ago, first of all, your interest rate would have been lower. But right now, you would have still had some equity. And even if it's minimum, you still are gaining equity, and that money is not just going anywhere. It's going into your principal balance, right? So think about that when you're thinking about, oh, you know what, I don't think I want to purchase yet. Think about how much money you're spending on rent. And there's ways that you can see where's your break-even point. And then, like Leroy said, remember that rates are not always going to stay like this, right? There's always something happening, And do we have other products? Yeah, think about the Home Ready, the Home Possible. FHA is also another, good program. Those interest rates are going to be lower than the ongoing rates. We currently have a promotion right now, quarter less for anybody purchasing in Cook and in Lake.
Okay.
It's a discounted rate.
Yeah.
Yeah. And take advantage of down payment plus $10,000 now. So
there's lots of money coming in.
There's lots of money coming in, right?
I talk, and I've done this for many other people. Many other people, we have turned around and say, okay, you're short of money. You can do the down payment plus it's $10,000. We can then negotiate closing costs for you.
Exactly.
I'm sorry.
We've done that, right?
Yeah, I'm sorry. We have done the DPP, which is down payment plus. Then we have gotten money from the seller. So let's say, for example, we get $10,000 from DPP. We got another $5,000 or $6,000 from the seller. So now you have $16,000 before you even walk into the house.
Right.
You may have $2,000 or $3,000, so you have $18,000.
Right.
So you see how much money you have now, and all you have in your checking account may be $2,000, $3,000, but instead of that, we actually have about $18,000
right.
because of the two programs. Now you can put those together, and you actually purchase a home. So it's not like there's no money out there.
Right.
There's lots of money out there for you to buy a home if you're a first time buyer. Lots of money out there. You just got to come on in, talk to Gabby. Once Gabby's done with you, I'll get with you, and we'll go ahead and find you a home.
So let's use an example using that same scenario. Let's put it in numbers. So think about a purchase price of a home that is $300,000, right? These programs of Home Possible and Home Ready only require 3% down. How much is 3% of $300,000? $9,000. And guess what? Down payment plus covers that.
Covers that already.
Right? And then how much do you need for closing costs? Well, you're allowed, since you're paying 3% down, your Libra can negotiate up to 3% down payment. So that's another $9,000. You already have all the money for the down payment, for the closing costs, but yes, you should have at least some money out there on, right? Because we always have to, we qualify you, let's say, under the worst case scenario. Let's just say that. But you have to show that you have some skin in the game, right?
Skin in the game.
Yeah, maybe $2,000, $3,000, right? And then if your mom, dad, sister, brother, it's a gift, let's say, sure, we can accept that. We can allow you to obtain a gift from your church, actually, from like I said, a relative. There's from your employer. So there's a few ways. Did you know that you can also take money from your 401k account, and you don't have to pay that back, or you don't get penalized if it's used for the purchase of your primary home, and I think it's only on your first home.
Yeah.
But I mean, the help is there. It's just a matter of making a decision and
Listen, there's lots of money out there for home buyers. We're not only going to help home buyer, but we're gonna do move up. If you're selling your house and you're buying another home, we'll help you transition into that home. So, but I want to kind of just give you a brief and not be so technical on a big picture of the home. And the home prices are still a good value. So if you're selling, prices overall dropped about 5%, but they're still at a value where you get maximum value out of your home if you're selling and then going to buy something. So don't think that, some people are thinking, and this is overall market. Some people are thinking, I'm gonna wait for the market to drop, but the market has not dropped in how long? Why? Because of inventory. The market has actually increased in certain areas of the U.S. Chicago, where we are in Cook County, has pretty much stayed stable. We have not had any massive fall. As a matter of fact, our median income, our median price is $19,000 is still there. We have not gone down. So if you're thinking, I'm going to wait for the market to crash, that may not happen right now. It may. I don't have a crystal ball.
Right.
But I'm telling you what's happening today. It may not. So all I'm saying is that value in home. And I've seen areas, by the way, in Cook and Lake County where price has really gone up, right? Because you're looking for property, and I have clients I'm looking with right now. I'm looking for clients, and there's nothing to purchase. And what's there to purchase, they don't want.
Yeah.
Right?
That's why they've been there, probably, right?
So we're looking, and any people in my office can tell you sometimes it takes a little bit more work. So it's great to have a realtor who's there with you. So if you got to get off work at 2 o'clock and say, hey, let's go see the home, that realtor is there with you, or that broker is there. So overall, you are in a position to buy a home because of the fact that even though there's short inventory, sometimes there's not. Let me say, it's really confusing because there's lots of buyers out there, right? There's lots of buyers, but there's small inventory. So you got to push a little bit harder. If you're ready to go, you got to push, and some people pull back. Well, I'm sure some people pull back because they waited so long their qualification runs out.
Right. That's part of it.
Right.
Yeah. And something that I want to mention, Leroy, is keep in mind that there's programs within your neighborhood, within your community, such as Northwest Equity Assurance Program.
Yes.
I don't know if you remember
That's a great program.
Right.
Some of you guys can go back and listen to that on the podcast, right?
Yeah. We're going to make sure that, So for somebody, going back to that example you said, you know what, I don't know, what if I lose value, next year? Well, there's the program that it's what it says, it's an equity assurance program. So let's say that you purchase something today and, next year, the property for some crazy reason, right? It drops. The value drops to less $10,000. Well, today you purchase it for $300,000, and next year the value is $290,000. Because you're part of that program, they will give you the difference of that whatever loss it is, right? And then it doesn't cost you. It's just basically you have to pay for an appraisal fee at a discounted price, but that's it. That's it. That's all you have to do.
Program,
and I mean, and it covers a big area.
Oh, huge area, yeah.
So all you have to do is see which part, if you're part of this program, and if not, which program you could take advantage of.
Yeah.
And then keep in mind that also, yes, we talked about Home Possible. We talked about the regular 3% down payment. But also there are other products like the adjustable rate mortgages. Don't be scared of them. An ARM, it's what we call a 5-1 ARM, right? It's fixed for the first 5 years. Fixed, right? Because it's an adjustable rate, right? And after the 5th year, you have to refinance, or not, it gets adjusted. But a lot of things can happen in 5 years.
Oh, absolutely.
Well, look at what's been going on just in these last 5 years, right?
I mean, if you buy a home today that you like, I mean, we expect, the rates went up. I mean, by the time this airs, we'll know the job market for January, well, March. Somewhere in there. But things can change.
Yeah.
And we expect the Feds to kind of hold rates for a little bit, from all the financial, I'm gonna say, pundits that I've listened to, they expect by the end of next year for rates to drop down to back to where it's 3. Well, they're saying 3 to 4%. So you can purchase now, and you can always refi later. You know what I mean? But at least you get into the home that you want to get into,
and the value is going to be there.
The value is going to be there because I want to reiterate this. We have not seen any fall. And okay, so we're in Cook County, and we're in the north side of the city. I have noticed, even in the south side of the city, value is still there. Value hasn't dropped. Value hasn't no. The values keep going. The value keeps going, and it's steady. That's what I'm going to say. It's steady. So will it increase? I believe if rates start falling, it will increase, right? But you got to be able to purchase now in order to. And I'm not saying because I want you to purchase with Mills Realty. You purchase with whoever it is, but it's my goal to let you understand. If you have not listened to this program, or no one has telling you, come talk to me at Mills Realty. Come talk to Gabby, and if there's any other information that you need, we'll give that to you. Because now is a fabulous time to purchase. Right now is a great time to purchase. So I'm just trying to get the banks. By the way, I want to address the banks that are having issues. We have a stable banking, right?
Yeah.
The banks that are having issues right now. The banks in California. I mean, it seems that it's all good, right?
Yeah. We're doing good.
We're doing good, right? We're doing good. So I want to say it's important that you talk to them about their credit, because as things go crazy, I want them to know what their credit situation should be.
Okay.
So talk about how to get ready for credit. We talked a little bit prior.
Yeah.
But if you can.
Well, we just make sure that when you're looking to purchase, you're not opening any new credit. If you have never tracked your credit, I might refer you to one of the HUD certified organizations, so they can do a soft pull versus a hard pull. What's the difference, right? A hard pull it is going to affect your credit score because it is a hard pull. A HUD organization will do a soft pull, and this way you have a history and they will give you a credit score also for all 3 credit bureaus. And so what they will do is give you some guidance, some coaching on how to increase your credit. You can also talk to me. We can brainstorm together. I can refer you to somebody in our one of our personal bankers to get started, maybe with a secure credit card, things like that. And maybe again, mentioning Bank On, that Fresh Start checking account, and then I'll give you more tips on how to increase your credit. I'm not a credit analysis expert, but I have like the basics, but I will refer you to a financial coach or one of these organizations that can really help you with that.
I want to say, and it's a great program, and I've dealt with them. So, but I want to kind of get back to, coming into us. We're not here to sell you anything, but to counsel you, to make sure that you're on the right path. As you see, the past couple of episodes we have is a matter of us coming together and say, how can you benefit from our knowledge, right? And so we will make sure that we're just going to sit with you and talk about what you need to do in order for you to get successful, whether or not, in purchase your home. So don't think of this program as you're looking at it as, okay, they want me to buy a house. No, it's a matter of getting you from one to the other, but giving you a jump start on how, because we have done this time and time again. So this is not like something we start. We've done this time and time again to watch folks go from one to the next and increase their wealth, increase their home, increase everything about them. So this is the really main goal when it comes to what we're doing here at the Mills Real Talk Show. It's a matter of increasing your wealth, right? Teaching you what you need to know, like we've done earlier with Penny and Carolyn. You
say, what was her name again?
But this is what we are, and as we do this, you continue to follow us. We'll always bring you people that tells us that teaches you, and if you want to know more about it, you can always contact us at the bank, Gabby at Devon Bank, or me at Mills Realty. So is there anything else we want to talk about before we wrap up? I think
we kind of covered
everything. All right, so hey guys, I want to thank you guys for listening to the Mills Social Talk podcast. We have, we always bring you the best of the best of people on our show. I mean, we're a Chicagoland team, but we bring you people that affects the entire, because you guys have a bank in California.
Yeah, we have it in a few states, yeah.
A few states, right? So it's not only for Chicagoland, but for, and we deal a lot with whether it's the federal government and their programs and all that kind of stuff. So what we say not only affects Chicago, it affects, the entire country.
Right.
So you can always check in with us. But I want to thank you. Go to the Mills Social Talk podcast, and this episode will be on our website at millsreal.com. So you can always go to the website and watch it time and time again if you're not sure. All of what we said is going to be on the millsreal.com. Thank you guys, and again, 773-764-9547, and that's your number?
773-423-2350.
Thank you guys, and again, thanks for listening to the Mills Social Talk podcast.